And then two, the last, are you gaining knowledge? First of all, it's a good thing that you've come online. You've come to gain knowledge. Are you reading books on financial literacy? Are you getting, who are your networks? Who are you engaging with to get guidance? It's possible that you're in that bar and then you're having a conversation. For me, I'm investing in this, I'm investing. Are those financial advisors, are they experienced? Do they have an experience in what they're talking about? Yes, they may say, I did Forex trading and then I made some money. It may not be the case for you. So please get wise financial advice, and it's good that you're on this call.
And indeed, if you had a CIS manager, you wouldn't have to break a sweat. Yes, you just have to wake up 8 a.m., go for your normal work routines, 5 p.m., go back home. The CIS manager is going to be working or promoting your fund, making those wise decisions in that regard when it comes to investing your money. So you don't have to lift a muscle at all. That is the beauty of a CIS manager. So look up a unit trust fund. It's the best actually. Is the best, a unit trust fund. And I would like to know more about that from Chimuli Musazi, a sales trader with SBG Securities UG. How do you understand financial fitness? You can also help us draw a correlation between financial fitness and the capital markets for our viewers.
Yeah. Yeah. Good morning, our viewers who have tuned in. I applaud you for sparing time to really pay attention to what we are humbly passing over. I would say, first of all, my host, I'll take my listeners a bit on a low tone.
Indeed.
We have a saying these days on Twala speed.
Oh, yeah.
You are taking people very fast.
All right, sir.
With us, communication, what we are communicating, we are very conversant with.
Indeed.
But what we are trying to pass on to the other person on the other side, even the dialect, I try to tone it down, even the accent to fit what we usually call omuntu wa bulijjo.
Indeed.
We no longer say omuntu wa wansi. So omuntu wa bulijjo. So that is the
trader into second market.
Yeah, a trader. That is the audience we want to touch. So I'll start by trying to mention what I understand by financial fitness. Financial fitness, in a summary, is being able to meet your obligations as they fall due. And financial fitness does not really have an age. As long as you are alive, you don't have to say at 40, at 60, at 80. As long as you are alive, there are obligations you need to meet. Lowest hanging, you need to eat. But there are other extras beyond the basic of living.
Would you say that you're financially fit right now?
Yeah, it's a journey.
Indeed.
Financial fitness is a journey.
Yes.
As Mr. Headmaster Sir said,
yes.
Financial fitness is a journey. When I started working, I was saying, if I earn 100,000 a month, and don't ask when I started working, you can see the gray.
It's a long time ago, yes.
So when I started working, I said 100,000 a month is just, I cut it. Once I have that, I cut it. But currently, even 1 million a month cannot make me financially fit. So,
what did you do different along that journey?
I'm not what I did different.
Yes.
I'm still doing things differently.
Indeed.
So it's a journey. That's why we came here. Every day there is something new that you need to innovate into to get better. You may be fit today. I'll give a specific example. During the lockdown, before the COVID lockdown, all of us thought we were someone, including myself. You have rentals, you have a few T-bills and bonds. Everything was put to a stop.
Yeah.
And that was a wake-up call to realize that financial fitness is a moving target. So every day Mr. Headmaster comes in here to host this course. I know this is not the first. Is to make sure they comment on something which has happened and see where it has left our viewers and listeners. A point in case, someone who mentioned receiving a dividend and then it was taxed and then the bank charges. So it's a check. Every time there is a check. Then we mentioned the 9.65 and last time it was what? From NSSF, last time it was 12.
12, yeah.
It is a financial check. Hey, wake up. What? It was a double digit. We are used to that. What made it one digit? It means even NSSF as an institution, does a financial fitness check
Indeed.
year on year. But to come back to your question, financial fitness is a moving target, and the essence of it is being able to meet your obligations as they fall due without strain. That is how I wrap it up. But also, to make it straight, I would be doing a disservice to myself if I don't mention where I come from.
Indeed.
I am Chimuli Musazi, Equities dealer, SBG Securities. SBG Securities is part of Stanbic Uganda Holdings. It's one of the holding companies of Stanbic. Our core role is dealing in equities. That is, to break it up, shares. Maybe if I mention equities, it may confuse a few.
Indeed.
Shares or stocks, it's the same, depending on where you come from.
Stockbroker.
Yes, a stockbroker. But to also make it clear, SBG Securities has been licensed to do the asset management business. So we have a unit trust up and running. Yeah, so
Shed more light on the unit trust, because it's not taxed, and many of our viewers do not know that.
yeah, it's the unit trust is maybe to break it up. They are investors or people with money who do not have the time, the effort, the expertise to go into the nitty-gritty of investments, to look at what is the return on investment for this stock, what is where is the yield curve, what is the short-term paper, maybe a T-bill, a bond, where is it, where are the rates, where is the 20-year. So all those are investment options. But the man who is looking for money down there and he wants to invest may not have the time to scrutinize each and every asset class they want to invest in. So that is when they bundle it into one vehicle, which we call a unit. With us, we sell units, and you say you'll buy units into this unit trust, and we shall do the expertise of deciding for you where we shall invest for you at a return that is promised, at a promised rate of return. So they do the work, or we do the work for you, invest your money at a return which we promise. Of course, it moves with the existing rates in the market. Usually most salespeople don't mention that. They will say we shall give you this at 12%. But as the rates move up or down, we move with the tide. So the benefits of investing in unit trusts are majorly two. You mentioned the tax.
Indeed.
Yes, we are in struggles currently with the tax man,
URA,
and the regulator CMA is taking the lead in trying to wrestle him down. Wherever it will end will be another story. But currently, unit trusts are not taxable.
I'm seeing
So
Terence shaking his head in disapproval.
Yes, I don't know how
that the CMA is.
I don't know how far they have gone, but we are behind them supporting this investment
Go
because
ahead.
really the unit trusts are not taxable
Indeed.
currently, though the regulator is seeing people earning some good money in terms of returns, and the fight is still on. Also, too, you get professional administration. You don't go into the hassle of trying to look at where the yield curve is, what are the rates of
Monitoring
return,
markets.
and monitoring the markets, which equities are giving a dividend.
So I just have to lay back.
That is our problem.
I just have to lay back and let the expert do it.
You just get your money, bring it
Indeed.
to us, lay back.
Perfect.
But also to go into what Standard Bank is doing as well
Indeed.
under
Yeah.
SBG. We are celebrating 160 years soon
Amazing.
as Standard Bank Group. Shimuli may be like 40-something years. So there are experts in that house who are running the show before I joined and even after I leave. So while we are doing that, I want our listeners to get the comfort that you are talking to the cream of the
Yeah, like
financial
cream.
markets.
Indeed.
At least I want you to have that comfort. Ask any questions.
Besides the unit trusts,
yeah.
Mr. Chimuli, what else can our dear viewers invest in?
Yeah, they can invest. When I was introducing myself, I mentioned I'm an equities trader
Indeed.
for the last 19 years. So when I give you the comfort to know that you're talking to someone who has seen it all,
Yes, sir.
please get the comfort to come in. Also, to make it clear, you mentioned my competition, Cheaper Cash. Guys, don't come to ask for me buying shares into Cheaper Cash. It's not a listed company. They are my competition, but you shall take them as they come. basically the key offering they have is technology, and their niche is being able to give you access to foreign markets, mostly the US. What else do we do as SPG? We deal in equities or shares.
Indeed.
That is a more easy but complex investment. It is the easiest but complex. But we have demystified it, and we are continuing to do the same. That's the reason I'm here. Someone may ask, what would be the minimum to come into equities, and what are the benefits? According to the regulations that we set up many years and we have been operating under, the minimum number of shares someone can buy are 100. That is the basic lot. The minimum lot, 100 shares. And the minimum amount of money you need to invest in there is, you get the share price times 100. Let me give an example. Stanbic is trading currently at 21 shillings. So if the minimum are 100 shares times 21 shillings, so how much do you get there? Plus a small brokerage fee or a regulatory market fee of 2.1%. To make it round, assume you have 100,000 shillings to invest. The commission chargeable would be 2.1%, which is 2,100. So with 100 shillings, you can buy shares. That doesn't mean it is the minimum. The minimum can be even less than 3,000 shillings. That is for starters. However, to try to make it a bit profitable, I'm trying to relate it to the question that we got from Mr. Headmaster Sir at the start. A colleague, I didn't get the name, sir, who mentioned he received 5,400 dividend and it was taxed. The bank charge was 3,000, and then the taxman came in. It comes back to how much have you invested. You know, the lower you invest, the lesser the return. And once you come in with your minimum, it is not done and dusted. You can keep investing every other day. So you keep growing your investment. That way, if a dividend is declared, you can at least get something sizable over time. You may buy today, buy tomorrow, and you keep buying. Usually the challenge our investors get, a point in case, is MTN.
Oh, yeah.
We were the lead transaction advisors as SBG Securities, and we ventured into the digital way of people buying shares at their convenience. We partnered with MTN, and they did *165 *65 hash. Everyone got into the market. But most of them thought that was the end of it all. The market remains open. You can keep coming in to buy more. You come to us as your stockbrokers. That was a digital app to allow you do the IPO transaction. But the market is ongoing. You can keep growing your transaction.
And indeed, the market is growing from 38,000 investors to over 130,000 now.
Sure.
What has precipitated that growth, Mr. Chimuli?
The growth is has really been due to awareness. We are not yet there.
Such programs.
We are not yet there, but this program is ongoing. People want the information. There's hunger for information, but the people to pass it on either do not have the platforms or they're not engaging enough, and the lockdowns a bit for 2 years really took us back.
Indeed.
This digital way of reaching out can reach out to the few we have touched.
Indeed.
But there are many people down there who we couldn't meet physically for 2 years. That one brought us back. But really, the growth
in this quarter, we are picking up.
Sure, the growth in technology has really contributed to the growth of the market. But to also go back to the specifics of investors who it's always good to mention or talk to the feel of an investor.
Indeed.
An investor who got 5,400 and got taxed. I wanted to really rotate around that so that we close it.
Indeed.
First of all, it's a good problem to have, to receive a dividend of 5,400. There is someone out there who didn't receive anything because they have not started the investment journey. When I was looking at the numbers, and Mr. Amboa, the headmaster, mentioned the 10% of the people who received the NSSF. I took note of that. 10% of those are below 50 million in their savings.
Indeed.
It's a wake-up call to me to gauge where I am. So our listener and viewer down there, have you gauged yourself? If they say the investor savers are 2 million with the NSSF, but of those 10%, which is like what, 200,000 are below 50 million. It's
And 70% are below a million?
yeah, it's 7%. It's a checker of where am I financially.
Yeah.
Those are some of the financial fitness checks. Yes, NSSF is a forced saving, I would say. Much as they are liberalizing to allow people to contribute additional on top of the mandatory savings. However, in your personal space, you also need to save. Forget this forced savings bit. You need to check yourself. Where are you saving and investing? Here is an option from us as
Go ahead.
the stock market. You can come invest in shares. I usually want to give a history for people to relate. This basic talk of investing in shares is there. But I want to give 2 specific examples of mine. One was 2008, 2006-07 when Stanbic Bank was offering its shares to the market. The price per share was 70 shillings. And by then, you needed 70,000. The minimum was 1,000 shares. You needed 70,000 shillings to get involved. And I didn't have the money, but I saw the opportunity.
Indeed.
So our listeners who didn't have that information then missed out. With me, I missed out because I was fresh from school. I didn't have the money. I missed out. So currently, I have some money to invest in. Then I can give another example of Safaricom.
Yeah.
It came in 2008. It's a cross listing. When I'm talking about investments, there are investments in Uganda and across the border.
Around 8.
Yeah. So it came at around 5 Kenya shillings, 2008. I went in and invested. But because I didn't have that long-term vision of where I want to go, I just came in Stanbic. It came at 70, IPO. Listed, it touched 210. And people sold out and made money while I was watching. 3 folds. Someone who came with $1 million would sell back and get out 3. So when Safaricom came, I used all the efforts to come in and invest. At least I found a way of getting the money. So when I got in, it was 5 shillings. Because I went with that short-term mentality of, let me get in, it may do a Stanbic and get out. That was 2008. I got in at 5 shillings. The market, due to challenges, a bit dipped to 3 shillings. I waited for a few months, and it wasn't doing a Stanbic. It wasn't going 3 folds. And I sold out. But currently, the stock is at 20 Kenya shillings and above.
I see.
So had I had that long-term vision, maybe I wouldn't have sold out. And people have been receiving dividends over the years. We tend to look at the share price. I've entered at this price, and then it is maybe slightly lower. Should I sell out? So
Patience is key.
Patience is key, and the long-term vision of where you want to be. As I said, financial fitness is all through your lifetime.
Indeed.
It's only the dead person who doesn't have financial fitness. And even then, we bequeath our assets when we die to our next generation. We envision financial fitness even after we have lived our lifespan. So what I'm telling my viewer and listener down there is, it is doable. Come to the stock market. You can buy a few shares. You can keep growing them. The prices may be up or down, but it is a good problem to have, receiving a small dividend. Of course, it's depending on how much you invested in, than someone who is receiving nothing. And with the taxman, I think that entry catch really took me by the horns. Getting the taxman into it, it's a noble social responsibility to pay taxes to all of us, because in a way we get the services here and there. However, the bank charge that was mentioned, the listed companies have evolved into going into convenience. Someone can receive their dividend on a mobile phone. Today as we speak, those who bought MTN shares, dialing *165, got their few shares, and those who got more. Today, 30th September, MTN is paying an interim dividend of 5 shillings per share, and Those who chose to receive it on their mobile phones, you can attest you have received a text message on your mobile money. There is no bank charge.
Indeed.
Yeah, so of withdrawing that, I mean, you can just get a few transaction charges withdrawing that money. You can use it to pay for groceries, and there are no really serious charges. So the bank charge is there, but we have evolved around that by even going all the way to paying you into your mobile money wallet.
That is Mr. Musazi Chimuli, a sales trader working with SBG Securities Uganda. We also do have Terence Jason, Mr. Tumwine. He is the Senior Research and Market Development Officer working with the Capital Markets Authority. You wanted to pitch in quickly before we go to Patricia Chiwanuka, who is on Zoom. You want to talk about the NSSF issue, the 50%? Go ahead.
Well, just to help provide guidance, Capital Markets Authority is not wrestling Uganda.
The URA.
URA. No. We are working together to ensure that we grow the market, because ultimately in engaging, you're able to share knowledge and see, please, if you tax, the savings rate is going to go down. There's going to be
investors will run away.
So
we want to attract
engaging.
more.
The engagement is still going on, and we are hopeful that this shall go on. But I just wanted to add something on the 15-5 financial fitness measurement. It's a well-known thing, because one, when you earn your salary, 15% of it, or rather 5% of it, goes to NSSF.
Yeah.
It's a must. It will go to NSSF.
Indeed.
And you will never see it until you're of eligible age, whether midterm access or you get to the time of retirement. So that is supposed to go off your account. Now, I hope we know that we are supposed to live within 50% of our income. I repeat, expenses must be able to meet, you must be able to meet your expenses within 50% of your income. It's a very big challenge. Even me, up to date, sometimes I am tempted to cross the
50%
60
threshold.
Even.
Yeah. 60?
60. We have a monthly AGM with my wife, and we say, how much are we earning? How much is coming in? And can we be able to squeeze it to 50 or even 40? Anyway, that's another discussion. But how can we be able to squeeze our finances to be able to meet within that 50%? Because that's the financial fitness measurement rule. So the rest is the other 5%. There's a 5%, and the rest you can be able to give to wedding meetings. But there's a 5% you're supposed to keep for emergencies. I'll tell you a personal story. Just 2 days ago, there's a car I drive. It's called, we nicknamed it Old and Faithful. It's not very new, so because it's old, its bones one time they get cracks. They need a bit of help. So I had parked at the supermarket at 9 p.m. and I went back to start it. It refused to start. So what do? Do you go to Apollo and tell him I want my money? How can you be able to access your money at night at 9 p.m.? The car is spoiled. That is what that 5% is supposed to cover. Those emergencies. 5% of your income every month, put on your emergencies. That car will break down. That child will get sick. You will just have to have an emergency medical treatment, God forbid. Emergencies come up.
And you're right about emergencies. Few people actually set up an emergency fund, because for one, I bought a car that broke down in 2 weeks. I didn't see it coming because it was a new car. So I had to get into the 70% even of my income to go and get a new gearbox and stuff like that. So I hear you on getting an emergency fund. Anything can happen. COVID-19. Now we are talking about Ebola epidemic now taking root. So emergency fund is not a discussion. You have to set it up. Go ahead.
So I just needed to put it out clearly that it's important. If there is something you can take away today, live within your 50%. That goes off NSSF, that 5%. But if you can make it 15% of your income to go into 5% goes to NSSF, 10% goes to Chimuli, and you let him be able to guide you on where he can invest. then the 5% goes to emergencies. Now 20%, some people say 10% can go to giving or tithing, or dependent on what you choose. But what I'm trying to say is, please ensure that you have emergency fund, and there are many other products on the market. The collective investment schemes, different players provide that, and they can be able to. You can tell us how quickly you can be able to. We technically call it an open-ended fund.
Indeed.
Where you can be able to withdraw your money. For some, you can withdraw within 24 to 48 hours. I don't know, Chimuli, how quickly can you?
Yeah, the investment vehicles are quite multiple, but for the collective investment schemes, there are different funds. Usually when an investor walks to us and they say, we try to understand where they are coming from, what is their savings motive, and we guide them accordingly. For example, there is a bond fund. A bond fund, in the collective investment schemes, there are bond funds which invest in assets of more than, or investments of more than usually a year or two. So we try to understand what your investment or savings motives are, and we advise you as to which fund to invest in. There is the money markets fund, if you are looking at short term. So where, for example, you may say, I am giving you my money, you will have it for a year. We decide where to invest basing on the client's investment. So
Patricia,
money markets, we look at the short term.
Go ahead.
Then the bond fund, we look at the long term investors who say, I'll live with my money with you for maybe 3 years, 5 years. And then the balanced fund, where you invest in a combo and a cocktail of different investments.
Indeed.
However, usually all fund managers and unit trusts players give you a timeline of when you can redeem. That, how much do you need? So there are different players. Some may tell you within 48 hours. Another fund may tell you within 24 hours. And the options may be digital withdrawal or transfer to a bank account. Usually all those are entered into at the time of signing up. But to cut it short, the timeline he mentioned is part of the contract that you sign when you're entering into it.
All right, that is Mr. Chimuli Musazi. Let's also bring in Patricia Chiwanuka. She is actually the managing director and founder of Revenue Stream Limited. She's talking to us via Zoom in that regard. A very good morning, Patricia Chiwanuka. Would like to know more about the capital markets in that regard, the correlation between financial fitness and the capital markets in that regard. There she is. A very good morning once again. Of course, the Uganda Securities Exchange is actually offering 3 instruments as we speak. That is the government bonds, corporate bonds, and share sale. Are you of the view that this is actually locking out participation from many other people who would like to, look at a diversified portfolio in that regard? You have had so many recommendations coming in from so many experts. The 2018 that is the 2018 ABSA Africa Financial Index report that actually called on Uganda to invest in innovation and create diversified portfolios. The viewer who is watching this broadcast would like to know, what does that mean? Has it been put into effect? And what is the future of the capital markets? Patricia Chiwanuka, that's your cue.
Thank you very much. Thank you. You can hear me well?
We can hear you well.
All right. So let's start at the first question. You asked what was capital markets, and I've been laughing at the comments coming through. I love Ugandans, so I have to start by qualifying that I'm one of you. And as much as I sound like Kenyan, my auntie is sitting somewhere in Kamoja, and she's listening to this, so I have to be honest. So let's start with the basic. Capital markets is you get money from people who have it, people who have savings, and you direct it to those who don't. So all the things I'm seeing questions coming in, I think Ronald has asked about what these assets are. An asset is something that you buy that makes you a return. So it's very important whether you're talking about treasury bills or bonds, or whether you're talking about equities, all those things is a way of giving money to someone who needs it. So the Capital Markets Authority helps that transaction or that movement of money to be done in a way that is first honest, and that you don't lose money. Now, why is that important? A lot of us are reading or going onto Facebook. A lot of us are going to our own friends. A lot of us are going to our family groups and getting investment advice there. So it's very important that if you can work with a regulated entity, you know that government has looked at this. I think there's been a couple of questions from Rachel and Sam who have asked, why is NSSF and CMA partnering? And does that mean you will get money out to put in capital markets? Now, only 5% of your money is sitting with NSSF, which says what? 95% of your money you're eating. So if I remove the taxes, because we've had a conversation on tax, and I hope URA doesn't find me soon. Let's assume you paid 30% in taxes and 5% to NSSF, that's 35%. The balance, which is 65%, you have eaten. So it's very, very important that even the Bible, even Islam, Quran, first says you must pay government tax. So when I'm talking finances, I assume you've already paid taxes. It's the balance of what you save that is important. So focusing only on the amount with NSSF will not assure you of financial freedom. And it's very important that you look at the number that NSSF had put up at the beginning. We have been told that even if you save faithfully from when you're employed, the 5% from your salary, the 10% from an employer and you're employed throughout, it is very unlikely that you will replace more than 30% of your money. And they give you that money as a lump sum. Now, why is this important? Just try and imagine a young person. Most of us in the group were between 35 and 40. A few were between 40 or so, about 40 to 50. Now, imagine if you have someone who has been broke all their life and suddenly they're paid a lump sum. What do you think happens? So I'll talk about myself. The first time I got money out of NSSF here in Kenya, I was coming to work in Uganda at that time. I withdrew some of my money. The first thing, of course, I did is bought a big Prado. And immediately, my landlord, I was staying opposite Kabira Club on one of the flats there, he increased my rent. So, question, was that a good investment or not? Now, would it have made more sense to take that money and put it in one of the unit trusts? You now have so many products to choose from. So even if you're not an investment expert, it's important that you pause and put your money, try not to eat your money now while you're young. I think it's also important to remember, as I said, my auntie is running, and in case you're in Kamoja, you can say hello to her. She's called Tata Sengaji Florence, or the children call her Tata Nalongo. She's 80, she's over 80 now. She's still at work today. If I call her, she'll be walking to the workplace right now. Isn't that very important to know that one of the biggest risks you have in life, as we're talking about financial fitness, is we are living longer than our grandparents lived. Now, that's a very scary thought for me as Patricia, because my grandmother died at 98, the Ugandan side. I agree, Emmanuel, a very bad idea to get a Prado, and I sold it and I bought a car shortly after because I couldn't maintain it. But back to my story. My grandmother died at 98. Now, that's a very scary thought because it says to me, as you can see from health, I'm not thin. I plan to be around for a very long time. I'll be here until about 120 years. Now, I'm just over 40. That translates to, for the next 80 years, either I figure out how to work or I figure out how to save to make sure I have enough money in retirement.
Indeed.
And that's a thought that you need to keep in your mind. Stop focusing only on the NSSF portfolio.
Indeed.
The focus on money between when you're employed in your 20s and your 60s is what most of us focus on. We forget that between 60, if you're Patricia, you may be here between 60 and 120. And so that is one of the things that I tell people is when you're still energized, when you're still able to work, take the time to work. It may not be in formal employment. You may be self-employed like I am, but even as a self-employed person, I now deliberately save money for retirement. I have stopped withdrawing to buy things. I've seen questions being asked about what happens to contributors who don't have internet or smartphones. Now, we are Ugandans. We know how to save. I mean, I've talked to taxi drivers at Ginger Road, they know how to save. They know how to use the car box. They know how to use the merry-go-round groups. We know how to put money together. In fact, research has shown that the people who earn less money, the people who you would call not wealthy in the society, are the people who save more.
Indeed.
The rest of us who get into even CEO, senior management, are the people who spend more, and therefore have less savings. And that's a very scary thought. So the question I'll leave as I hand it over back to Romeo for the next question is, if you look at your village church, who is the person who is running the elders? Is it the person who was the banker, or is it the person who was a teacher, or who worked in the civil service? Why is that? Also ask yourself, between the bankers and some of the people who think they should do better, how many of those are alive in their 80s versus the person who was a teacher? And the reason for that is teachers deliberately save money through their SACCOs. They deliberately will buy unit trusts. They'll deliberately make intentional savings. On the other hand, those of us who are in Kampala, who are driving big cars, we spend more time using money instead of saving. So over to you, Romeo. I'm happy to take other questions.
That is Patricia Chiwanuka, the Managing Director and Founder of Revenue Stream Limited. She comes with a wealth of information And I'm still with you, Patricia Chiwanuka. What is the percentage given from unit trusts? We'd like to know more about that. And what amount of money do I need as an individual or company before entering the capital markets? Patricia.
Sorry, I missed that.
Patricia,
what
what is the percentage given from unit trusts, and what amount do I need as an individual or company before entering the capital markets?
I think that was answered by one of the panelists, which is to say that usually the amount of money. So, for example, to buy a share, I think we've had from a lot of 100 shares you can purchase. So the amount is usually not significant. So I'd rather focus on what percentage of your income you should be looking to save. The second thing I'll say, for unit trusts, remember what you're buying is a unit. So you can buy as many units within that fund. And I think that is extremely important. The challenge that I give individuals is start. You can even build up to that 5% emergency fund.
Indeed.
And I think I'll talk about the emergency fund in a few minutes. But the idea is start saving. So let me use an example for myself. My brother was a banker for a long time. And because I was working out of town, I was actually in Kampala at the time, he was staying at my house. So he chose to, well, not save and basically enjoy his life. And when I came back, he found out the land and was trying to build. The man who was the banker did not have a house at that time. It shocked him into action. And so it's very important when you're thinking about your money, your savings, that you think about your total savings. Capital markets is one part of it. So whether we talk about government securities, and I'll come back to what those are, or you talk about equities, or you talk about anything else, unit trusts, it's important that you remember you have a full portfolio of assets. So be very cautious and be very deliberate. So for me, I encourage people not to focus on amount of money that you're saving, but to focus on the percentage that you're saving. Okay?
Yes, Patricia. Also, after the setbacks caused by the COVID-19 pandemic, of course, avoidance or denial cannot be the rhythm of running African financial systems. So how can capital market analysis be employed by African heads of state to get out of this current financial impasse or financial crisis that they are in? Crisis.
I saw that question and I laughed. So let's speak from where we're sitting. Our governments are borrowing, and they're borrowing to invest a lot in infrastructure, although a lot of that is also going into salaries and expenditure, and that's where the challenge is. Just like a human being, to eat, borrow money to go on holiday, then you get a bit of stress. But what we've seen is the markets, the central banks are being very deliberate now. We're seeing tightening on taxes. That's why I like the example on taxes. People are now paying and paying faithfully. The second one is we're seeing deliberate control on government spending starting to happen. But what is very important, and I think a question was asked, that the markets are very, very narrow. We have very few listed stocks coming into the market, very few individuals participating in the market compared to when the stock market started. So it's very important that we take responsibility as citizens as well, that it's important that we participate in our own markets. When you say you're putting money into Forex trading, or you're buying Bitcoin or some cryptocurrency somewhere online, and you don't even know where it's going, I think the challenge I always ask people is, first, is that a patriotic move? But more importantly, do you even understand the risks? So I think it's important that, yes, I think governments are focusing on this, but right now it's safe to say, whether you're in America or in the UK, there is pressure across the capital markets. So it's important that you own a diversified portfolio. So if I speak like a Ugandan, it's important that you have the piece of land which you like. Don't put all your money in land. It's important that you have your bank account that has liquidity in it and the unit trusts. And then it's important that you now buy the other assets to make sure that you have a spread portfolio. Make sure you diversify your assets. Don't eat all your money.
Yes, Patricia, there have also been calls from some financial experts to have some reforms done within the Capital Markets Authority Act, indeed, like providing incentives to local companies within Uganda so that they can participate in the capital markets. What do you make of that, the reforms? You also do have a 2018 report that was authored by ABSA Africa, you understand, ABSA Africa Bank, and they actually called on Uganda to invest more in innovation and create diversified portfolios. The viewer wants to know, what exactly did they mean by that statement? Investing in innovation.
Innovation. Let's look at Safaricom and what has happened with M-Pesa in Kenya. M-Pesa has totally transformed the way we do business, and is being studied internationally. We've seen this being adopted now even in Uganda with your MTN and Airtel, and the mobile money has changed just even the way we transact. There's a time before that I would literally have to come to Uganda to get money to my father or to my aunties. Now I use my phone and money gets across very easily. That kind of innovation, we're African, we are known to innovate. The challenge that we have, and I think it's when we talk to the regulator, innovation will come from the market and not from the regulator. Zeno came into the market with a mobile app a few years back, and Aeko is actually a Ugandan, and people were not comfortable initially on putting money through their mobile into Zeno Capital. Today, if I ask a number of my friends who are in Uganda, they're actually investing through Zeno Capital. So the underlying asset that they're buying is capital market assets, but you're now using your mobile to innovate. I think that challenge is very real. If you're going to reach out to a Ugandan who's in, I think I saw someone talking about being in Arua. I've recently done some work at Karamoja. I was recent at Zimbabwe. It's important that if you're going to reach out to those people, conversations cannot happen in Kampala alone. So it's very important that as a financial service, and I'm glad to see SBG here because they're one of the people who are more innovative. It is important that we make sure as financial people that we speak first in English. I think someone said speak in Luganda. My Luganda is pathetic. But it's also important that we bring the service to the people. We need to deliberately reach the people. And I think that's what NSSF is trying to do today and CMA is trying to do. So I totally agree with the ABSA report that there is a need to innovate. The difference, I would say, is it's not the Capital Market Authority's job to do the innovation. The second thing, going back to capital market, is about bringing money from those who need it or those who have it, the savers, that is us, and bringing it to the company that needs it. So it is important that the companies that come to the market are also legitimate companies. And I think that's where, I think someone gave an example of buying shares 10 years ago and they've made no money. I would say, please take that report and go see the SBG team or one of the other fund managers and have that conversation, because it means you've not gotten value from the market, which the market is growing. Okay. I think there's a question I've seen here asking me about the relationship between CMA and forex trading. The answer is I don't think there's any relationship between the two. It's people like to do exciting things online, and when you lose money, you blame the regulator. So I hope that answers Bright PT as well. Thank you.
And indeed, thank you for your time. That is Patricia Chiwanuka, the Managing Director and Founder of Revenue Stream Limited. Now, my panel is here. I do have Terence Jason Tumuine. He is a Senior Research and Market Development Officer. I also do have Mr. Musazi Chimuli. He is a sales trader with SBG Securities Uganda. We also do have Mr. Apollo Headmaster Sir. All right, we do have a question over here from one of the viewers who are watching this broadcast, and they were wondering, why can't NSSF set up its own bank so that people can go there and borrow money at a fair interest rate?
Thank you, Romeo. You need to sign out with Sir Headmaster Sir, please.
Sir Headmaster Sir.
Call me in by the right initials. Thank you so much. Thank you so much. I felt like Patricia should keep talking. No offense, gentlemen, but Patricia, you need to keep talking. You've narrowed this down, and Patricia, we have a date when you're in Uganda. We will set up a webinar, and we shall have ladies discussing money. So Patricia, make it a date. We want to have you in the studios, and let's have these conversations going on. It just goes back to personal responsibility. Stop the blame game. My members, stop the blame game. You have a responsibility about you that you need to do something for yourself before anyone else comes in. Why doesn't NSSF do its own bank? NSSF has a bank, owns a bank. They have a bank, and that is National Housing Finance Bank. But there are banks which are there, and they have been told, there are banks that have been asked to do actually the micro lending and also lending at cheap rates. So when you go to UDB, of course that is for the big size, but when you go to Microfinance Support Center, it becomes a little bit, when you go to Microfinance Support Center, you can actually get those micro loans that you're looking for at from 8% to 13%. So it doesn't make sense for NSSF to replicate what someone else already is doing. So get that information right. If NSSF starts a bank and then crowds out all the other banks, you are looking at another problem: unemployment.
Indeed.
Stanbic employs about 3,000 people. So do you want us to crowd them out? But there are people already they are doing this. I also want to ask, there are questions really coming in. We have over 200 questions that have come in. We may not answer all the 200, but Patricia has touched a little bit on all the questions, and I've sent Romeo there some number of questions. If your question is not answered, kindly just reach us out. We will reach out to us, and we will be able to have a one-on-one discussion with you if you feel like it hasn't been touched. We may not touch everything, but we'll try to our level best. Savings, you need to start somewhere. They talked about the merry-go-rounds, the savings banks. In my hand here, I have a savings bank, a piggy bank. Apologies to the other faith. We have also something that doesn't go with the piggy. But there is a piggy bank, and I have 10 of them to give out. Just be the first 10 to send your name and your contact to this number, and then you will have 10 of these. Then you start.
Indeed.
0701 189 894. The first 10 will receive these, and you start. We need to start somewhere.
The number is
0701. I'm being slow about it intentionally so that you don't all get it. But
0701
0701 189 894. We have 10 of these to give out. We've said let's create a portfolio. The 5% you have at NSSF is not enough. Create options. And we are saying, this is with the CMA. CMA is saying, start with this piggy bank, then go to Musazi here as the Equities dealer, and then you can start investing your money.
Indeed.
The CMA NSSF marriage, someone was worried. Are they going to take our money to CMA? And then no. As NSSF Financial Literacy Team, we do this, and we bring authorities here. We talk to all authorities. We bring the URA here. We bring everyone we think that you need to talk to for you to have options. Our role as NSSF Financial Literacy Team is to get you in conversation with the people who you think, who we think you can do business with, and we bring in the. Yes, I've been told that stop sending. They're already there. The 10 have already been taken. CMA, you may need to give me another 10 because this has been filled up, and we'll work on that. So we work with all authorities, Bank of Uganda, all authorities, all market leaders. Our bit is you have an option outside NSSF. We want to have a member who has money at NSSF, money in unit trust, money in rentals. We bring farmers here because we feel like we need to interface with them. Allow me to just say this before I hand over back to Romeo. NSSF is also in its final plans of starting a unit trust. You want us to participate? Yes, we are also not wrestling this time, but in talks with the CMA to give us a license so that we can have a unit trust and then serve you. NSSF money is also not taxed when you are taking it. Someone was asking, how much do they tax? No, it's not taxed. It's not taxed. It's not taxed. You have already paid the taxes. When we invest, we pay taxes on your money. So when you take it, it doesn't pay tax. Let's have our last poll question, and then I hand back to Romeo here.
Indeed.
Our last poll questions, we'd want to know, now that we have had this bit, it's not, of course, all the knowledge you need, but now that we have had the beginning on this knowledge, where are you at? If the back office team is kind enough to share that poll question, would definitely, yes. Would you invest in the Uganda capital markets? Would you invest? And the answer is yes or no. Would you invest? Now that we have broken down some of these things, kindly, would you invest in the Uganda capital markets? Yes or no? If yes, which part? Would you invest in the treasury bills, the stock and shares, the collective investment scheme? If no, what are your reasons? We want to have those. What are your reasons? If no, I don't have enough money, it is complex, I don't trust them, I have better options, I will think about it. Would I just want to understand, now that we have begun this conversation, by the way, I'll let it known that it's not after one conversation, it's a series of conversations. We need to have this conversation going on. We need to have these conversations. And what we do here at the NSSF Financial Literacy Team is to have this conversation going on. I know you dedicate some time to discussing football in the UK and firing coaches and firing everyone being the coach. But we also want you to dedicate some 5% of that time to just discuss the markets. Let us get into that field. So in the next 5 seconds, let's have this close off. And yes, I can see about 50% have. Please come in. I want to go beyond the 50% mark of the participants. Our participants on Zoom are the only ones that can do this. If you're on YouTube, you'll forgive us. YouTube, LinkedIn, and Twitter, you can't be able to participate, but the ones on Zoom, you can be able to participate. Would you invest in the Uganda capital markets? So moment of truth, and that's when we know whether Mr. Howard Terrence is going to earn his money. If yes, which part? If no, state the reasons why. And let's, in the next 5 seconds, let's understand. Yes, as we finish this, we will share all the contacts of the panelists. All the panelists will share these contacts. We have shared the contact of one of ours here where you can be able to reach us directly. We have shared our emails. If you have NSSF related questions and no one is attending to you, please send to us, and then we will definitely advise you. And we have stopped the poll. 94% say yes, they will invest her. No, now this is her. Terrence is going to be earning a huge bonus of this particular answer. I want to CMA Keith, please know that I am part of this, and anything if it's happening for these guys, I am part of this. NSSF is part of it. Yes, the 94%, they will invest. The majority of them are saying they will invest in the treasury bills and bonds on the secondary market. The majority of them, then the stocks and shares, 50%. This is a multiple. You could actually, you're going up by popularity. So 50%, the most popular is treasury bills and bonds. The next popular is stocks and shares. Then collective investment schemes at 49%. So it is more of a split. It is more of almost the same bit these are almost equally popular. The 4% that have said no, they will not invest because they don't have money. 29% are saying they do not have enough money. And then 46% of them are saying they will think about it. There is something about, I don't know the pronunciation, but postponing the thinking, the postponing action that is happening here. And 46% are postponing the action. 19% are saying it's complex, and we are going to work on that complexity today. Others, there's 3% that say we don't trust the capital markets. Then 9% have better options. I would love to hear from those with the better options, and we are using the same number I shared, using our emails that I shared. Please send us those options, and if you are willing to share those options with the public, please, we invite you in, and we have this complete conversation about the other options, so that people get to know where all those other good options are. So lady and gentlemen here in the studio, I hand over back to Romeo. Seeing what you see now, please, let's have the last round of comments coming through so that we can
Many
round
thanks.
out. Thank you.
Sahid Master, sir, many thanks for that humble submission. Of course, a very good morning once again to all the beautiful people who are watching this broadcast, and a special good morning to you, the chairman of the Uganda Securities Exchange and also the managing director of the National Socio-Security Fund, Mr. Richard Biarogaba. We see you. He believes if we strengthen capital markets, we can create capital for businesses within this country. So how best can we increase participation within the capital markets? Reforms. That's a conversation we'd like to talk about with Terence Jason Tumwine, the Senior Research and Market Development Officer at the Capital Markets Authority. What is being done by the CMA to ensure that the reforms that we are talking about right now are put into effect? What is the process?
Thank you so much, Romeo. First of all, when someone talks about reforms, it sounds like they are going to be merged. And with this conversation around merger, so it's possible that that conversation might happen. But at the moment, CMA is still a standalone entity.
Indeed.
That serves under the Ministry of Finance, who are our supervisors. And yes, there are reforms. People feel there are things that need to be amended within the Act, just so that you know. We are in the process of amending the CMA Act to be able to allow for different products to be able to grow, in retrospect to one specific aspect that people may be interested to know is the private equity, because some of them have been registered as companies, so we're trying to appreciate them as limited liability, and even other areas of amendments, and there are so many that we're trying to work on. We actually had a stakeholder engagement conversation on Wednesday this week with a number of stakeholders. We're asking them for feedback, what can we change to be able to serve the country better. And just to respond to Sir Mr. Headmaster, Sir's suggestion, that we shall not get a bonus. For us, we are happy to just share knowledge. There's no bonus that will come from sharing this, but we are very happy that 96 or 95% will be happy to consider the capital markets. Now, if you don't mind, Romy, I just want to speak to that person who's saying, I do not have enough money, and share a story that I got from a webinar I attended.
Indeed.
There was a gentleman who was a shoe shiner, polishing shoes in the morning, and during the day, this is in Kenya, during the day he was selling maize, cob maize, roasted maize, and he would sell it every day. Interestingly, he was saving about $2, which is roughly about 10,000 per day. Every day he would put that aside, put that aside, put that aside. Over a number of years, over 5 years, he was able to buy a tipper, a truck. I think that's an easy way to put it. And he was putting this in a circle. So he got a loan, and then in addition to his savings, he bought a truck. He employed a driver and a turn boy. This has grown over time. His life has changed. There's that border man, a friend of mine, who I may not be on the call because he does not like smartphones. But he told me he's able to save about 30,000 per day.
30,000.
30,000 per day.
Amazing.
And he had worked in the business for about 1.5 years. He had 2.7 million on his mobile money. And I
That's
told
Kenya
him,
shillings.
why you're not even looking for anywhere to invest? Why are you putting that money? And we're eventually buying him into collect investment schemes. We just need to change our language to have a Luganda version of a brochure that we have,
Indeed.
and then he'll be able to read it. I will tell you, there are beautiful stories in the market, very beautiful stories. I don't know about you. If you're earning 1 million, 2 million, you can surely save 100,000.
And indeed, Mr. Terence, in 2018-2019, we were ranked 9th out of 20 countries. I would like to know our rankings right now. You know, South Africa was ahead of us, Namibia, Mauritius, all these countries, Egypt and Kenya, they were ahead of us. And we would also like to know how we can increase the number of local listed companies. We have like 9 or 10, and 8 cross listings, mainly from Kenya. So we'd like to know, how can we increase participation locally? Go ahead.
Okay, if I get your question straight, ranked in terms of number of listings or in terms of market
Performance, yeah.
of oil, there's a report that's yet to be published in October by the African Markets ABSA as well as
Indeed,
yes. So that will be able to give us a clear picture. But what's happening now, to be able to increase performance, to be able to increase the number of listings and the number of players in the market, we are appreciating that the capital markets cannot be narrowed to the number of listings.
Indeed.
It's beyond listings. It's beyond a few, 5 or so rather, a company is listed on the stock exchange. We're saying the capital markets is the private equity side.
Indeed.
The capital markets is the saving bit that can be able to invest in. The capital markets is the people who are being channeled, the private, we approve of private placements, who are investors, high net worth investors, who are looking for where to put money. And we are helping all that. So to be measured by the number of listings, I think is just a narrow angle. But the capital market is growing. There are beautiful players in the market. The number of deals that were done with the most there's a study that was done by the East African Venture Capitals, and they appreciated the number of deals that are happening in the capital market space. So the number of listings may not tantamount to success in the capital markets, because they are actually, people are sharing. There's the person who doesn't have money, and there's a person who's looking for, the company that's looking for money. And these are actually having interactions, and we're approving of these.
And of course, now Bank of Uganda is clamoring to have the Uganda Securities Exchange reflected on offshore indices. How good or bad is this? What are the pros and cons concerned with this, when our Uganda Securities Exchange is reflected on these offshore indices? So, like JP Morgan and stuff.
I hear you very, very clearly. But among other things, we seek, as the capital markets, in the long, rather in the next about year and a half, to be fronted on the frontier JP Morgan market status. What does that do for the layman? So when we get onto this status, it broadens the number of participants that come into Uganda to invest in Uganda.
I see.
And there was a country, I forget the name, as soon as it was put on this status, the number of institutional investors that came to that country, because Uganda is a beautiful country, but for some people it's such a small country. They don't see what's happening in Uganda. But when it's listed on
they can outperform the first world economies.
Literally, it literally opens up the country. People are able to know what's happening in Uganda. How is the performance of the bond markets? And they can be able to come and invest in the bond markets, in the corporate bonds, in the listed companies. And this is optimally measured on the level of openness of the country, the number of listed companies in the country, the size of listed companies, and all these are measured indices so that they can be able to be brought onto this platform. But long story short, it opens up the country. You see a number of activity. You see a number of investors seeking
Indeed.
to invest in Uganda.
And there will be increased participation.
Increased participation, GDP grows,
Nice.
the economy is able to grow tremendously. But all this is, we hope we should be able to as when we're hoping for another listing that should be able to come up in the next financial year. I'm not able to speak about that.
Indeed.
But there's, as soon as it comes, hopefully we should be able
And
to.
I'm glad you've been able to put that into perspective. Thank you so much, Terence Jason Tumwine. He is a Senior Research and Market Development Officer with Capital Markets Authority. We also do have Mr. Chimuli Musazi, a sales trader with SBG Securities Uganda. Mr. Musazi, talk about, you wanted to pitch in on the issue he was talking about.
Because it really
I
touched.
also have a question from a
this
viewer.
one really touched my nerve when you said if we get listed on the world indices.
Indeed.
Personally, as a dealer, if I'm to give you some basic information, 70% of our market, of the churned turnover, is from those foreign funds. You know, they have funds, the emerging market funds, big, huge international brokers and fund managers have a desk of emerging markets,
Yeah.
and Uganda happens to be among those. So the visibility, some of the few of us, you know, you'll be surprised when you look at the level of how many people have Bloomberg in the market. In Uganda, not in the market, even banks. So the first check is when they go on Bloomberg and search for that index. It gives us visibility. So it gives me an easier selling position than starting from scratch. So that one really, it's a win. Once we are there, it's a win.
Indeed. I also have a question here from Untambi Anthony Mike, who says, how can capital markets enable the building of a formidable African economic capital base that can transform African economies from a third world stage to a second or first world financial status? That is Untambi Anthony.
Okay, that is a generic question, basically. It covers everything that we are doing here.
Yeah.
As Mr. Headmaster mentioned, the role of the capital markets is to make sure that we enable the existing investors or the companies existing to raise capital to grow the businesses. And the multiplier effect is there in terms of jobs and everything that follows companies running. So the capital markets are an avenue to raise money. I'll give an example. Actually, you started with the CIPLA one, and we can even go to, which one? Let me give an example of Uganda Clays. There's a time, some 10 years back, they wanted to raise money to start a kiln in Mbali, Kamonkoli. That was around 10 years back. They wanted to expand operations because the Kajansi site was just becoming too small for them to feed the market in Rwanda and the market in South Sudan. Our clay was seen as the best. So they went into a capital raising drive. What did they do? They did a rights issue through the capital markets. And really, that was a winner for them. They started the market. But to wrap it up, on my side as an equities trader, I want to touch on just two issues. One, the partnering with NSSF. When you get a thirsty man and drop them in a lake, they may drink all the water, the thirst goes, and later drown.
Yeah.
In relation to the hefty mid-term access, which we who are middle-aged have been grappling for to get for years, when they declare these interests, and once you turn 45 and you get this money, imagine you have been struggling and you get that hefty lump sum.
Indeed.
Do you know the havoc it can cause if you have not gotten financial fitness?
So they should start planning now.
So this is the partnership,
before the
so that
money
to give
comes.
them options before they dive into drink and drown.
Indeed. Thank you
It's
so
an
much.
advice. And
That is,
lastly, the issue of trust.
Trust.
Someone who mentioned trust, it really touched me. Because as SBG Securities, we are part of the Stanbic Uganda Holdings, and people are depositing billions of money with us. That is trust.
Actually,
You're
there are
putting
never
their money.
cases of fraud when it comes to the capital markets.
So once you,
Highly
if you have
regulated.
entrusted us with your money, in terms of a bank account, in the investment option, we have that integrity. Please come to SBG Securities. We shall give you options to invest in.
That is Chimoli Musazi, a sales trader with SBG Securities Uganda. Patricia Chiwanuka is largely online. She is the managing director and founder of Revenue Stream Limited. We are talking about recommendations, Patricia. Before we let you go or wrap up this whole conversation as a whole, what are the recommendations you have for us as Uganda to actually ramp up participation within the capital markets moving forward? And how best can we harness the small gains we've achieved over the last 24, 25 years? Moving forward?
All right, first, thank you very much. I would say for all the people on the call, first start saving now, I think is important. It has to be deliberate. My mother, even at 73 years, is still encouraged to save about 10%. So my first recommendation is kindly start saving. You will live longer than you plan to in retirement. So unless you're planning to die very soon, which is possible, I would suggest make that a habit and a lifestyle. As we said, financial fitness is not about theory, it's about the practicality of it. So you have to start somewhere. The second thing I'll say as a Ugandan is take time to also enjoy your life. YOLO, for those who are young, you only live once, is true, but it also means don't spend everything, don't spend all your time chasing money and forget the other important parts of your life. As a therapist, I'll say to you, remember, keep a balanced life. Take care of yourself, take care of your health, especially your health. As you get older, your health starts becoming a challenge. So it's very important that you think about how you will conserve your health. And finally, just to address the NSSF and capital market story, I'm very delighted. I think this is one of the few countries I've seen such a partnership happening over the years, and that's a very big signal for you and pride for me as a Ugandan that says not only is NSSF seeing their role as helping you save money now, but they're also empowering you to a journey towards financial independence. NSSF is just one part of your savings, so it's very important that you take time, work with professionals, don't do it yourself. If you ask the gentleman in the studio, if you ask myself, I've been in this for over 20 years. And so I encourage you, please seek professional advice. That conversation on trust is very important. Anyone who is regulated, anyone who can go and stand in front of the regulator to be vetted is someone you can trust. Now, if you're getting your advice from social media, if you're getting your advice from outside that system, then that is where the issues of fraud, con men, and every other strange shenanigan happens. So I will say for now, I wish you the very best. Capital markets in Uganda are growing. Yes, the number of listed.
Patricia, are you still with us? That is Patricia. Patricia Chiwanuka, Managing Director and Founder of Revenue Stream Limited.
But the number of deals, so for example, my business as Revenue Stream, I'm very clear, would have to go at some point to come. Even as a business, this is an opportunity for you to make money. Thank you.
Thank you so much, Patricia Chiwanuka. That is the Managing Director and Founder of Revenue Stream Limited. Yes, we are talking about how best you can attain financial fitness through capital markets. It's been now like 1 hour and some 52 minutes. Moving forward, we're about to wrap this conversation. Let me hand you over to Sir Headmaster, sir.
Thank you, Romeo. Thank you, and thank you so much, the panelists. We are coming to a close of this, and I just have to pick up some of these things as you were saying. Patricia, don't go offline, and before you go, I need to keep reminding you that we have a date when you're in Kampala. We are going to have a webinar, a date with Patricia, so that she shares more of these insights. We feel like we are not getting enough of you. If you are being online, you need to be in the studio here, and then we can definitely kick this off. So if the media team is kind enough to share that slide, I just want to share with you something I think I've picked up from all this. Key about this, and Patricia, the gentleman here have really tried to put in perspective, is your habits, your objective and goals, and your discipline matter. So while you still have active income here, please set aside some income to form a portfolio. The portfolio we are talking about is put money in a unit trust, put money in a treasury bill, put money in a savings, put money in one of the, in a circle, in an investment club. We are saying you put money on on a routine basis with discipline. Make it a habit to put money aside, because the habit of losing money does not start when you get your NSSF. It has been your habit losing money. Every day you get salary, every day you get salary. So make sure you make it a habit to put aside money. And once you have accumulated enough in those, what I call that portfolio income, then you can move it to the passive income. You can buy that huge building you want to buy. You can go into that big forestry. It is indiscipline for you to build a house for 7 years. Save this money in a pot, in a unit trust, and then pick up the entire 30 million and build your house under 3 months, under 6 months. And if you are able to follow that with discipline, you can now go into what we call retirement. Retirement is not an age, retirement is an amount. When you reach that amount that brings you money, when money starts sweating for you, Terence here told you about money. Financial fitness is when money is sweating for you. It is sweating, you have deployed your money. You can now retire. And we are talking about, not retiring is not going to sit home. It's you now coming to work. And when you are coming to work, you are just coming to serve. It is ministry. You are not there for the paycheck. You can actually say you are in service. You are not there for the paycheck. So ladies and gentlemen, you need to plan. You need to prepare. Prepare, that is, you need to protect and sustain your money. So that in that case you can prosper. I call prosper eating money. You reach a point when you can eat money. You need to eat your money. You need to eat it so well that people can envy you. But that is only if you have the habits, the objective, and the discipline to grow this money. I want to inform you that as NSSF, we are putting products in place, and we are quite clear. We are quite becoming innovative on this. The voluntary product is up and running right now. There is nothing that stops you from upping up the 5%. Actually, Romeo, yes. Let me start with, as we go now, we are doing our homework.
Yes, sir.
You have 95% going into your pocket. Mm-hmm. Of course, the URA will take away something. Make a pledge. No one is going to follow up, but just make a pledge and you will account for yourself. How much are you putting on your voluntary over and above the 5%? It's up and running.
800,000.
800,000. We don't know what percentage that is, but thank you, Romeo. NSSF is ready to receive that money. You can sign up as a voluntary contributor, and you up your 5%. Terence, percentage, not amounts.
Percentage. At the moment, like we're talking about diversifying.
Yes.
Yeah.
So NSSF has something. I also have a 15% that goes somewhere else.
Okay. So I've had statements instead of commitments, but we'll definitely yes.
15% that's actually going right now.
Yeah.
I wish I can be able to increase it to 20% of.
No problem. So that is just 5% for you, because the 10% is not coming from you. So 5%, yes.
This is intentional.
Intentional, yes.
Off my monthly paycheck.
Okay.
15% is supposed to. I need to increase it to about
20%. Okay, we'll take that. Mr. Musazi, just to put it in perspective, is from the richest bank in Uganda. So when I talk about bonuses, I know what they do. Yes, Mr. Musazi.
10%.
10%. He's doing another 10%. Patricia, right now, if you can put down the slides, right now we are able to receive money even from the diaspora under the NSSF smart card. Visa, there's a visa code, but you can also do it under all these other different bits. There is a whole team waiting to sign you up. You took your NSSF Kenya, but you need to build a portfolio. Commit. I won't follow up, don't worry.
Pledge taken, and I will commit to at least voluntary of 5%.
Thank you so much. So our panelists have done that. They have committed that. Now I call upon you, all our participants. Yes, we have been saying and sharing all this information, and we have been telling you, go and look for the opportunities. We are now being intentional, and we are saying, let those opportunities come and reach you. As NSSF, we shall provide the opportunities we can provide, but then leave up to you to search all the other opportunities. The ones that we can't provide, you can definitely, we'll try to bring in the people here that provide those opportunities. But for now, the starting point is there is NSSF voluntary. We can no longer say, yes, you now are ready and we don't know where to send you. NSSF voluntary is ready to absorb you. Thank you so much, Romeo. Thank you so much, Terence. Thank you so much, Mr. Musazi. Thank you so much, Patricia. At NSSF, we always believe action changes things. And Romeo has voluntary, and we have And Romeo, I thought Romeo had a parting shot, but I always have
Yes,
homework.
I do, because there's a question here that has come in
Yes,
from a viewer, and it's really important. Paulo Forno, it is going to you, Terence. He says, I bought shares worth 1.3 million in Nick over 10 years. Today, my share value is still around the area, or probably less. Yet, Uganda's economy has been growing and insurance sector expanding. Is CMA suggesting that value of assets of a company never grows? What about factoring in inflation, appreciation of assets, exchange rate fluctuations? I don't have any good news to talk about Uganda's capital markets, da. So that is his issue. What do you have to say about that?
Terence, and a minute, eh?
Yeah.
Yeah, because I want to onboard something.
Terence?
I need to emphasize that when you're investing in equities, you're investing in the vision of a company. Today, it may go. He just shared a story. Chimuli just shared a story. He invested in the short term. Safaricom went down and then went back up.
Yeah.
You're investing in the vision of a company. That prospectus that you read is a vision that has been presented to you saying, this is where we are going. Does it mean it may not go down temporarily? It may. But does it mean it will also go up? It may. But it's a game of having to appreciate the valuation of the company. Michael, you want
All right, you're going to
yeah,
add on.
maybe I want to chip
You're
in
going
on
to
that-
add on and
on
also
that.
react to this question.
Okay.
Advise used to improve customer service. I'm an investor in stocks, but they don't reply my emails. I'm trying to change broker who is eligible to invest in government securities and bonds. Someone here is arguing. You never reply his emails.
Okay, I don't know which broker he's talking about. If he sends to US is not a broker. The broker is SBG Securities.
SBG.
And you know, we have a bank which also runs. We are the best primary dealers in the fixed incomes, bonds and T-bills. We are the best primary dealers. Even the secondary market, we have bonds to offer. Please, I had told Mr. Headmaster sir to share the SBG Securities email so that any question that refers comes to us. But to answer the NIC issue, most of the investors look at the stock by valuing it based on price. But they should also need to factor in that since he bought those shares, he has been receiving some dividends from NIC. So the value of the stock really, he has been receiving that. So when you do the calculation of the dividends he has received since 2010 when it got listed, I believe there is some return on investment.
Indeed.
Much as the economy has not been that good, but there is some return on investment.
And lastly, Musazi, this is an anonymous attendee. This all sounds good, but how does the CIS manager benefit? Is there a trap? Can't I lose money in such investments? Because there is a saying, is a come, is a go.
Okay. The CIS managers benefit in this way. When you are signing up, everything is on the sign-up document. You are given the terms and conditions. Across the board, currently, the industry charges, I think, 2% of the 2% are management fees, but that is not even chargeable on your principal. It is chargeable on the interest they make for you.
Indeed.
For example, if you brought in your 1 million and you get a 10%, the 100,000, the 2% is chargeable on the interest, not on your principal that you have invested there. So I think they will share the SBG email and we can answer any question.
Indeed.
There's no question.
Under 40 seconds, Terence, you wanted to react to that?
Thank you.
Easy come, easy go is not in a regulated environment.
Indeed.
That's why we're here. That's why we're standing here to give confidence in SBG, Zeno, or UAP, Britam, Sanlam, to say that we are regulating these entities. We monthly check their reports and ensure that your investments are protected, because we are here to protect your investment.
That is Terence Jason Tumwine, Senior Research and Market Development Officer working with the Capital Markets Authority. We also did have Mr. Chimuli Musazi, is a sales trader working with SBG Securities Uganda. Don't forget Patricia Chiwanuka, Managing Director and Founder of Revenue Stream Limited. Not forgetting you, Richard Biarugaba, the Chairman of the Uganda Securities Exchange and also the MD for the National Social Security Fund. Do not forget, just like a marathon, achieving financial fitness requires discipline and determination. Do not sprint. Don't sprint, please. You can saunter, you can walk, take your time. It is long term. That's what you need. Patience, discipline, and determination. Back to you, Sir Headmaster, sir.
And you did forget Sir Headmaster, sir. Thank you so much. Thank you so much. But before we sign out, I've talked about the voluntary product, and I have just one question, and I want to put it aside, put it to the person who is in charge of voluntary at NSSF. How do I sign up? Briefly, how do I sign up? Where are the forms? When do I sign up? When do I start? Just take my platform, but you do not become the headmaster. Then tell people, how do I sign up? Where are the forms? What can I do in under 30 seconds? Then you can give me back my office.
Thank you so much, Mr. Headmaster. My name, once again, is Peter Byamukama. I'm the Acting Senior Manager of Voluntary Business. It is very easy to save with NSSF. We have given you a platform, we have had you. You want to grow your savings, you want to top up on your savings. It is very easy. Just send an email right now to voluntary@nssfug.org. All our platforms are very easy. It's very easy to save with NSSF using the mobile money platform, using the bank. For those in the diaspora, you can use the Visa card, MasterCard. So I think, Mr. Headmaster, that should be it. Just send that email. You can even call our toll-free numbers. Just go on our website and we shall give you all the information. It is just a simple form. You get an NSF number and you're able to save with NSF immediately. Even now you can make that transfer. Thank you so much.
Yes, Entebbe Woma, I can see the man doesn't want to leave my seat. It is always a pleasure to have this conversation, to take off 2 hours of your time and we talk about your money, the money in your pockets, and the possibilities that you can do with this money. I remain the same, the headmaster of this class, and I will continue being the headmaster. I'm just repeating this for these panelists so that they know I am the headmaster of this class.
Looking forward to our next engagement.
Yes, and Patricia, it has been a pleasure. We will definitely have a date. Allow us to stop at this point and say thank you so much for tuning in. The numbers have been shared. Chimuli's number, Terence's number, they have been shared on our pages. Please feel free to reach out on our page. Then we'll share some of this other information through our channels. Reach out to Anna Maria, reach out to Jackie, and then we'll be able to have all this. You can find this recording on our social media channels. You can find it on the CMA channels, and you can continue going through and over this particular lesson. From NSSF, we thank you and good night.
God bless you all.